Welcome to the 1 to 1 Million Podcast, your weekly crypto alpha for those who never quit. Today, we're going to be diving into the markets. We're going to be talking about dollar strength and why it's causing the markets to just absolutely tank. We're going to be talking about the Fed and what to expect in 2025. Are we going to get any rate cuts anymore? Originally, we were pricing in all these rate cuts. Now it's down to the market's pricing in 0 to 1 rate cuts. What does this mean for the wider markets? We're going to be talking about Trump's inauguration. That's next week, and his first 100 days in office, and why I'm insanely bullish on that. And overall, we're going to be talking mostly about how just literally everyone and their mom has lost their minds. They've lost the plot because they are calling for the end of the bull market. They're saying it's already over. There's a lot of people that are posting the psychology of the market chart, and they're saying, we're in the complacency stage. We're about to dump. This is it. This is the end. These people, I don't know what's wrong with them. I literally don't know what is wrong with their brains. I don't know if they're on cocaine or what it is, but they are out there. They're out there because this makes no sense, because in my 8 years in crypto, there has never been a single more bullish setup than the current one we're sitting on. It literally unfathomably bullish right now. And I don't know what is wrong with these. I literally don't know what's wrong with them. Okay. Some of these people need to check them. These are going to be the same people at the height of the market. They're going to be like, actually it's a super cycle now and it's never going to end, and then it's going to dump. Okay. That's these people. Okay. Because the bull market is I will die on this. I will literally die on this hill. I'm like a very reasonable person. I'm like, this is a low conviction take. This is a mid conviction take. This is a high conviction take right here that we're talking about. We are going higher, high conviction take. I hope I'm already getting you pumped. Let's dive in. All right, we're going to kick this episode off with one little key stat before we dive into all the stuff we just talked about, and that is the total market cap of crypto today is $3.5 trillion. Compare that to the market cap of Apple, which is $3.58 trillion. So right now, today, the entire market cap of crypto is smaller than the market cap of just one company in the stock market, Apple. Just one single company that can't even make a decent photo app on their phone because it's absolute trash. It's absolutely terrible if you use the new upgrade. Wow, my goodness. I don't know what they're doing, cocaine too, apparently, because it sucks. It's really bad. The entire market cap of crypto is smaller than the market cap of just one company, Apple, on the stock market. Okay, that blows my mind. Okay, if you want to know how big crypto is today, like, oh my gosh, crypto is so big. No, crypto is tiny. It is smaller than just one company on the stock market today. And this is going to be a $100 trillion plus asset class in the future. So we are ridiculously tiny and early today. I know people have been saying that since 2010. And guess what? Those people have been right since 2010. Okay. They said in 2010, crypto's tiny today. And they were right. They said in 2015, crypto's tiny today. They were right. They said in 2017, crypto's tiny today. They were right. They said in 2021, they're going to keep saying it. They're going to keep being right because we're going to have real world assets. We're going to have all this stuff come on chain, and it's going to only continue to grow as an asset class. We are so insanely early, and we're going to continue to be early until we are not early, which will be at some point in the future when we're not. Okay, so my whole point is tiny today compared to where we're going. Higher, okay? That alone should convince you we're going higher. It's still early. All right, let's dive into dollar strength because it's been absolutely crushing the markets. A lot of the things we're seeing happening in the market can be attributed to a lot of things. It's not just dollar strength, but dollar strength is one of the things that's absolutely crushing the markets right now. And we're currently sitting at the highest levels that we've ever been at since 2022. We're sitting currently at 109. We peaked a couple days ago at almost 111, so we're a little bit over 110. So with dollar strength, let me give you kind of an overview of why this is wrecking the markets. Basically, there's a lot of countries and a lot of people who owe money. Their debt is in dollars. Okay, so like they have this big debt, they have to pay it in dollars, and that's not a big deal when the dollars are weakening. Okay, actually, here's a better analogy. Imagine you had debt in Bitcoin, so like you owed one Bitcoin to somebody. So you're like, I have this debt. I'm taking out a loan and I owe one Bitcoin. It's not priced in US dollars. It's priced in Bitcoin. You owe this person one Bitcoin. Now let's imagine, at this time, Bitcoin's $1,000. And let's imagine Bitcoin runs all the way up to $10,000. Your debt that was one Bitcoin, if your earnings are in US dollars, is now 10 times as large. Even though it's just one Bitcoin still, that debt is now 10 times as large in US dollars, which is what you earn your money in because you're a US citizen. Your job pays you in US dollars. You have to pay back this debt. You owe 1 Bitcoin, but now it used to be $1,000 US dollars, now it's $10,000. That's kind of a big deal. And if you kind of are worried about this, the Bitcoin price continuing to go up, you might try to pay off that debt quicker because, what if this thing goes to $100,000 and, suddenly you have this massive, massive debt that you're going to, it'll take a lifetime to pay off. So you're freaking out. You're like, I need to pay this thing off. So you go start selling things. You start selling, maybe you take a mortgage out of your house. I don't know. Maybe you sell your stocks. Maybe you sell some of your gold you have in your house. I don't know what you got in your house. Maybe you sell your PlayStation, your TV or whatever. You're selling off assets, you're selling things to try to pay off this debt before Bitcoin goes even higher and your debt gets even worse. Okay, that's kind of an analogy for dollar strength and why it's crushing the markets. You have all these countries, all these people all over the world, they owe money in US dollars. So when the US dollar goes up in value, if you make money in US dollars, maybe you're not thinking of it like this because you're like, a dollar is worth a dollar, just like a Bitcoin's worth a Bitcoin. But it does go up and down in value relative to other assets. So when it goes up in strength, it goes up in value. That makes it more expensive for other people in other countries to pay off that debt. So they have to sell off assets. They have to sell off crypto. They have to sell off, maybe the real estate holdings. They have to sell off stocks or whatever to try to pay off this debt before the dollar gets even stronger. And again, especially if they're worried about it getting stronger, this becomes a real problem. Now, alongside of all these things, the dollar getting stronger also just kind of screws other economies, other currencies. China is struggling right now. The UK is struggling right now. They're dealing with all these problems with their own internal things. And the dollar getting stronger just absolutely screws them. And that has to do with capital outflows. That has to do with trade and export. That has to do with the debt we just talked about. In general, okay, other countries do not like it when our dollar is super, super strong. It makes them very sad because it's screwing them over. It makes investors really sad because, it's causing the markets to crash. And it also makes U.S. goods really, really expensive to export to other countries. So manufacturers and people that make stuff in the U.S. that export it to other countries also get very sad because, that sucks for them too, because now people don't want to buy them because they're more expensive to them, right? It's like because the dollar is going up in value, it's kind of like a form of inflation for them in a sense, in a way, because it's like harder for them to pay for those items because they're now more expensive in their currency terms. So dollar strength going up has not been a great thing for the markets, but we do have a shred of hope, and I'd actually call it a lot more than a shred of hope, and that is the inauguration in Trump's first 100 days in office. Trump historically is actually a very big fan of a weak dollar, which some of you guys might not have known. And that's for a couple different reasons. It makes U.S. exports we're exporting more goods, which Trump likes that. It is better for the markets, which Trump likes that. And I'm just going to read through a couple different quotes from Trump. We have January 2017, before taking office, Trump remarked that the U.S. dollar was too strong, making it difficult for U.S. companies to compete with China. In April 2017, in an interview, Trump said, "I think our dollar is getting too strong. But that's hurting. That will hurt ultimately." In August 2019, Trump was talking about China and Europe and accusing them of currency manipulation and suggested the U.S. should match their actions to remain competitive, aka making the dollar weaker. In July 2024, in a Bloomberg business interview, Trump reiterated concerns about the strong dollar, noting that manufacturers found it challenging to sell products abroad due to the dollar's value. So you can see Trump very much does understand the dynamics of a strong dollar versus a weak dollar. And he is a fan of a weak dollar, which is very, very good for the markets. And actually, if you go all the way back to 2017, when Trump took office, so you can see December 2016, the DXY, which is the dollar index, hit a high of about 103, okay? 103.769, okay? After Trump took office, it went from 103 all the way down over the next year to a low of about 88. So after Trump took office the first time around, dollar strength fell dramatically because Trump is very pro a weak dollar. Again, this might be confusing. People don't understand it. Like, why wouldn't you want a strong dollar? Again, it has to do with markets. It has to do with exports. But in general, a lot of market participants are in favor of a weaker dollar because it is economically better for the U.S. And you can see that we saw that happen right after Trump took office his first term. And hopefully we can expect that to happen after he takes office his second term, which would be very, very bullish for all asset classes, but especially crypto, which is very reflexive when it comes to global liquidity and changes in global liquidity. Now, just on top of this, okay, there is so much more when it comes to Trump's inauguration in his first 100 days in office that I think are insanely, insanely bullish. For one, Trump is very, very, very pro markets. He views it as like a barometer of his personal success. And now he's very, very pro crypto, congratulating himself on a Bitcoin hitting 100K. Like, it's tied into his identity now. So Trump wants to see crypto go up. He wants to see the markets go up. He's very pro capitalism and just the success and lifeblood of America doing well. So he wants to see these things happen, and he's going to do everything in his power to create a market environment that causes all these things to go up, that causes all these things to do well. And I think people are vastly underestimating how impactful Trump's first 100 days in office will be, and how exciting Trump's first 100 days in office will be. Even if you don't, maybe you're not a fan of Trump, or maybe for whatever reason you don't think it's going to end up doing much because he's going to get blocked or whatever. It doesn't matter. Like, the headlines, those first 100 days are going to be absolutely unhinged with deregulation, with cutting taxes. He's talking almost in a way where it seems like he's wanting to abolish the IRS or something crazy like that. And I don't know if that's just talk or not, because he's talking about this, external revenue service, where he's like, we're going to make all our money from tariffs. Taxes suck. And he does genuinely hate taxes. He wants to massively reduce taxes. Again, it's very, very stimulative for the markets. That's like a little liquidity injection into the markets. So we have a lot of these policies and things that are very, very good for the markets that we're going to just see headline after headline after, and especially when it comes to crypto. If you think about the last 4 years, they've been a nightmare of headlines for crypto. Despite that, we made it all the way to $73,000 per Bitcoin, despite a nightmare of headlines for Bitcoin. And now we're about to get just like 4 years of just very pro bullish crypto headlines. Okay, tons of like deregulation, tons of like opening up the door, tons of market clarity. How can you not be bullish about this? Is why I keep saying people are just lost their minds, because it's the amount of catalysts ahead that are positive are absolutely unhinged. So I think, a lot of people are saying inauguration's a sell the news event. I think it's the opposite. I don't think it's going to be like the day of, the day of that we're going to just skyrocket or anything. But it's like the month, the 4 weeks from inauguration on, like, keep an eye on that. I think that's a very much buy the news period. I think that's like, boom, we start skyrocketing. And in general, the first 100 days, I think it's just going to be absolutely unhinged, bullish, insane. Okay, so that's my take. Now, alongside this, and I think to the market's advantage from here, is think about all the bad news we've gotten over the past couple of weeks, or like the market repricing because of macro, right? We've priced in now the Fed only doing 0 to 1 cuts. We have priced in tariffs being like massively inflationary and being like super insane. We priced in a ton of like inflation coming. So everyone's freaking out. Like, inflation's going to rise back up. It's going, way higher. Fed's going to have to raise rates. All of this has gotten priced into the markets, which is why we've seen this massive dump, right? Maybe not fully, maybe not like the Fed cutting or raising rates, but for sure right now the market is pricing in 0 to 1 cuts, and is pricing in like tariffs having this big impact, and is pricing in inflation coming back. Any surprises that we get that are different than this are going to be surprises to the upside. Okay, so if instead of getting 0 to 1 cuts, we get 2 or 3 cuts, boom, that's a catalyst for price appreciation. If we get 4 or 6 cuts, like, people will lose their minds. If tariffs aren't as bad as people are expecting them, which I don't think they're going to be as bad as people are expecting them, I think they're going to be well thought through and done well. A lot of it's going to be used as a negotiating tactic. If that's the case, boom, that's really bullish, and that's a good that's a bullish catalyst. And on top of that, if inflation comes in like cooler than people expect, if inflation isn't the massive, insane deal that people expect, that's another price catalyst to the upside. Basically, I'm trying to say that we've priced in this worst case outcome now, and we've already paid the cost for that. We paid the price for that. So now anything that happens that's a little bit better than this is going to be inherently bullish and going to lead to upside appreciation. We're like a spring coiled, right? Like, all this bad news kind of coiled us down. All this kind of like macro doom and gloom coiled us down. And now I think we're just set to spring. If any of this changes, if any of these policies or anything changes, if all this stuff Trump's doing his first 100 days, the inauguration, dollar strength going down, all these things are like that spring coiled down, right, ready to explode. This is why I say this bull market is just getting started. There is no way that it's over. Like, I cannot fathom I cannot, literally short of World War III or like nuclear destruction or a meteor hitting Earth and destroying all life, or like some solar flare like knocking out electricity and us going into the dark ages. I do not understand how anyone could think we're going into a bear market. I've talked about this before. The big epic bear markets we see in crypto every 4 years, they happen for a reason. And it's because of all this abundant leverage that enters the system, all this froth that sends markets way too high. Obviously, that's got to come back down. When it comes back down, it craters because we go so ridiculously high based on leverage. We get deleveraged and we get this big correction. Okay, we haven't had that. We haven't had that problem. That leverage has not entered the system in the same way. We have not experienced the froth. We haven't experienced retail FOMO. We haven't experienced this mania phase. We are sitting really, really healthy. So we're not going to see a massive pullback. If anything, I were to believe it's that not that the cycle's over, but that we're just going to have a longer cycle than normal. Like if the 4-year cycle is broken, that's very believable. I think that's possible for sure. But if I'm going to believe that, it's not that it's going to end earlier. It's that it's going to go longer. That we're going to see actually a longer 4-year cycle. They could be a 5-year, a 6-year, 7-year cycle. Like I don't know. Maybe it goes longer. And until that retail FOMO mania phase kicks in and that leverage just really heavily enters the system, we're not going to have an epic crash. So maybe it's just like same thing we felt 2023. We're going to do kind of the same thing, go up slowly over 2024. Maybe we kind of go up slowly over 2025, over 2026, until it finally builds up enough steam to where it hits the mania phase. We go into this crazy bull market and then we crash. A lot of outcomes are possible. My default is still a 2025 bull run, but I could go a lot of different ways with it. I think we could see kind of a bull season first half of the year, a pause in the middle of the year, bull season second half of the year. And if we're going to surprise anywhere, it could be that bull season goes a little bit longer into 2026 and we actually go into like winter of 2026 and then we finally crash like April, March, May of 2026, and maybe that's the end of the bull cycle. Not shorter, longer. That's where I would lean towards. And again, I will die on this hill because that is where all the evidence points. That's what every piece of evidence that I can see today suggests, is that we are still early in this bull cycle. And I will change overnight. If some piece of evidence comes out that disproves this, shows me I'm wrong, shows me that, hey, actually it's going to be really bearish because of this crazy thing, I would happily change my tune, my opinion. I've already made a ton of money during the bear market. I'm not like a late market participant. I've been here since late 2022, 1 week from the exact bottom. Okay, so I'm happy to throw in the flag and say, hey, I've made my gains. I did a good job. I want to protect those. And I'll do that. When the time comes, I will flip bearish. But it is not the time to be bearish. There's no reasonable explanation to be bearish today. And that's where I'm sticking. As always, none of this was investment advice. None of this was me telling you to do anything. You should always do your own research. Crypto is risky. You got to be careful and you got to accept the risks you're taking, getting involved in the market, be an adult, and don't come complain to me if you end up losing money. If you want to see more episodes of this show, you want to see this thing keep going and succeeding, please leave a 5-star review on whatever platform you're listening to this. If you're watching it on YouTube, just, like and subscribe, leave a comment and all that kind of stuff. And I'll catch you guys later.